In today's video, we're going to take a look at Google for its pre-earnings patterns. Now, earnings for Google is right around the corner, July 23rd, after the market closes. And with today's close here, with today's red candle, we've tagged the first Fibonacci zone that we have when we extrapolate all of these little swings in this entire move up. Now, this is, of course, the first level, and the question we have to ask ourselves is this the level in which Google's going to pause and reverse from, or do we get a pullback to deeper Fibonacci levels? Now, to answer that question, I look at a series of clues, and the first one starts with the daily time frame chart here. Now, on that daily time frame, we have momentum that's crossed to the bearish side, and we have all of these wicks to the upside. That, to me, suggests that we should be looking for more bearish price activity. There's a few things suggesting otherwise. The first is, of course, the fact that we've tagged this Fibonacci level. The second is the way that price action closed. We closed essentially inside of our volatility box models, though we did slightly break outside of it. We closed inside of our models along with a bunch of edge signals here as well, 1, 2, 3, 4, and 5. And together, that tells me that we're officially getting into this place where we're in overbought, oversold territory, in this case, oversold. So I'm trying to weigh the idea of that intraday volatility signal along with the daily time frame chart. Now, if we take a look at the second set of Fibonacci levels that we have right down here, that's near the 180 price zone. 180, if we were to get a pullback to that area, would overlap fairly nicely with the market pulse, and I would be a little bit more comfortable buying at these zones compared to what still feels to be a little bit extended. Now, the second piece of analysis that we can layer on is Google's pre-earnings personality. Here I've loaded on our pre-earnings indicator. For all Volatility Box members, this is a free indicator that you can download on our earnings homepage. Just go to tosindicators.com/earnings, and there, inside of the course, you'll be able to access the downloads for the pre-earnings, the post-earnings, and the smarter earnings indicators. Using the pre-earnings indicators, we get an idea of what tends to happen in Google as we head into earnings. I've queued this up to 4 days pre-earnings, which is after tomorrow's candle essentially. And we can see that 4 days into earnings over the past 5 years, Google's price action tends to rise about 70% of the time, tends to fall about 30% of the time. On average, that rise is about 3%, the fall about 4%. So it gives you this idea that Google tends to rise a little bit more from this place compared to fall, at least over the past 5 years. If you look at implied volatility, you see something similar. Implied volatility also tends to rise more often than not. What happens if we load in more data here? Instead of 5 years, let's load in 20 years. And with 20 years worth of data, we can see that price still tends to rise more often than it falls, but the implied volatility pattern has dropped a little bit. 60% dropped down to about 56%. So across the board, what we're still seeing, if you were to use 50-50 as a breakdown, is 4 days pre-earnings, Google tends to rise, and we see that with both price and volatility, both with the past 5 years along with the past 20 years. If we shrink this from 4 to 3, and we see how these stats change, we can see that 3 days into earnings, we still see positive stats. 2 days into earnings, we still see positive stats above 60%. And 1 day pre-earnings, that's where that number drops below 60% with 20 years worth of data. So using our pre-earnings analysis indicator, that's suggesting that Google should be finding support somewhere here very soon for that pre-earnings momentum to kick in. The last earnings related observation that I can make with Google is using our smarter earnings indicator. This is a free indicator available to everyone. Same place to download it. I'll leave a link in the description box below. Using the smarter earnings indicator, there's one thing that I think stands out. First, let's use the gap fills versus the gap and goes. 9 gap fills versus 44 gap and goes. And again, this is going back 20 years. So very clearly, we can see that on the day of earnings, after the earnings report is out, so this is for July 24th's trading activity, more often than not, we should see a gap and go, meaning whichever direction Google gaps, it should continue to trend in that direction. Now, out of these past 44, 28 have been in the bullish direction, 16 in the bearish direction. Out of the 28 in the bullish direction, 24 of those 28 have been on earnings beats. And the way we classify earnings beats for the indicator, simply the actual earnings is greater than the estimated earnings using the thinkorswim built-in functions. So using all of our earnings indicators along with Fibonacci, we get this idea that Google has this personality, A, for pre-earnings to rally at least from 4 days into earnings, which is essentially where we're at. We're also tagging key Fibonacci levels, but it's this daily time frame chart that's giving us a little bit of pause, and I'm looking for a slightly deeper pullback here. Though with all of these positive signals, I do find myself questioning if I should at least start some sort of initial position. But today's bearish engulfing candle makes that, I think, fairly difficult to do. Along with that, we also see the actual day of earnings personality for Google, in case you'd like to simply just wait for earnings to actually pass, not play this pre-earnings move. You can take advantage of this gap and go tendency that Google tends to have, at least over the past 20 years, and look for maybe that bullish gap and go, which tends to happen much more frequently, especially if you have a nice earnings beat. I hope you found today's video useful for those of you looking to take advantage of Google's earnings. Take care, everyone, and I'll see you in our next update.